the price action is trying to check for the order that is heavy or the order that carries weight
Okay.
for it to respond to that order. So so that is what it's actually doing when it's doing mitigation. So it has to go up to supply to check. So it's going to mitigate whatever previous supply was there to check, or whatever previous I was there to check.
Yeah.
And then not able to, uh, so if it's able to have enough supply to sell down as a bullish market, so as a bearish market.
Yeah.
Otherwise, to go down to check for demand. If the demand has a good weight, it will break through as a bullish market.
Yes, sir. You are very correct. There are just three things that the price always goes to do. It goes to check the demand or supply in an area, and at the same time, it goes to take out a previous structure or to take out weak lows or weak highs. So that's liquidity. That's basically everything that comprises the market: structure, liquidity, and direction. So those three things are what market always does every single time. To always do that. And an inducement like this is just liquidity. Because why? We have this low that failed to break structure, and so price had to come into it, tap in here, taking it out. And yet we still have demand here. So there are
Yeah.
some demand that
So any load, sorry sir, any load that fails to break structure or a high that fails to break structure, will it be taken out? Can we use it that way?
yeah, it will most likely be taken out as liquidity. But in some cases we can find out that there might be some demand pockets around a particular low, just like in this case now. You know that this particular low, this one here, it failed to break the structure. And yet, when we still came back, price still came into it and tapped. And from there, it was able to continue to move upward, which is where we are currently at now. You see that?
Okay,
So I'm trying
okay.
to explain the demand in that area that price reacted from. But it appears that price had to come lower to find the demand. So there was a reaction here and there was another reaction here. So we can say even the whole of this area was demand on its own, because why? The first time we had price reacting here and it broke structure. Sorry. And then it went upward, taking some liquidity around here. And then the next time again, price came into this, the breaker block that was here. You see the breaker block here? Breaker
Yes,
block
yes,
that
sir.
was here. Tap from there and then went up into this level. Use this one as inducement. Tap here. So you saw that price had to come again, sweep this low, and then come down into this demand. So we've seen that price has tested that area about 2-3 times. So that means that there is some heavy form of demand there for price to react over and over and over from the same zone. So by the time price had already tapped here and gone up and done everything here, we now have this new zone here. Because why? We saw some reaction here. That was telling us that there was some level of demand in this area. This one came down into it, went up, and price was still reacting around the same place,
That same place,
around the
yes.
same place before it went up. And then price came again, used this zone here as demand to be able to go up, and the rest happened around there. So now when price failed to break structure on the general narrative, when it failed to break this structure, we had to come down to come and take demand here to be able to move up from there and go up. So we see that this is now going to be the next area of liquidity for price. This is going to be external liquidity for price to take eventually. Because why? This high failed to break structure to the downside.
So bearish
Yeah.
market.
So it failed to break structure. Because why? We didn't take this out. Despite this one failing to break structure to the upside. So it will be a liquidity to be taken out eventually. We have external liquidity and we have internal liquidity, as I said. So external liquidity is that high that failed to break structure or that low that failed to break structure. So on the general narrative, this structure now, this one is still external liquidity. And one day, soon enough, we hope to take it out. This is external liquidity. All of the internal liquidity is what is
Yes, sir.
happening here. This is internal liquidity. So, as I explained, we have the swing leg. This one move from here. Whatever is here, that's external liquidity. This one, external liquidity. This one, external liquidity. So since price failed to take out this low here, that failed to break structure, then that means that this I has now become the new external liquidity. So we have to take out that I soon. And now we now have price tap here. We had price tap into this demand, went up here, reacted from a supply here. See that? It reacted from a supply here.
Yes, sir.
So after reacting from the supply, it broke through the supply, went up. And now that we know that price has been able to break through that supply, then we know that the low responsible for breaking that supply now becomes an area of heavy demand, which is here. We spoke about mitigation the last time.
And I see something here that that low it was able to break that
Okay,
structure, that internal
this low
structure, so it was protected.
was able to break this structure.
Yes, sir.
Yeah, I think I will
Yes,
agree
sir.
with you on that. Although what I was looking at here was the supply. So price reacting to this supply. If
Okay,
yeah,
okay. Supply.
you know that
Look at
when
the
we are
supply
calling
as
something structure, it has to have a high, it has to have a low. So
okay. I would have called it
yeah. So
supply.
if you want to call this a structure in a way,
That's the better
you
word.
might be right because we have a high here, we have a low here. So all of this happened. Price reacted from this and we came down here. But generally, if you were to ask me that where is the structure here, I would say this is the structure because this I was responsible for breaking this structure here. And then we came down here and tapped here. So there are different ways you can view it. But we had supply here. So it was responsible for pushing price down. Because everything that is happening inside of this. It's happening inside of this. So this is the discount and this is the premium. Price will come here to come and sell. Price will be here to come and buy. You see that? So wherever we see structure like this is discount, this is premium. Price will come here to sell. Price will come here to buy. Okay. So I saw that you marked your premium discount around here somewhere. Am I right? Let me check. Where is it? Okay. Okay. I don't think we are there yet. Okay. All right. So okay, I think this was the area in my premium discount. All right, we are getting there. So we had all of this happen. We had all of this happen. So we had this range. This one was premium. This one was discount. And so we should expect that whenever we are in discount, we should buy. So now we saw that price was reacting from a supply. in this zone. And so what we'll be watching for is to see what price will do, because price came there a second time, and that tells us that buyers are really interested in taking out the supply. But then we have to watch out and see if they are going to take it out. And that happens with this one. So price went up here, broke the structure according to what he said, and took out that supply. Whatever supply was there, he took it out. And I said something about transfer demand. Now, if you were to look at this, you see that this was where we tapped into
Yes, sir.
demand the first time. So we expect that okay, the demand, next demand should be around here. But now you see that we moved up, we tapped into all of the contracted supply here. Price came down into this and moved up from there, created an inducement, took out this high, and then we had to come for this inducement, which was this low, which was this low. After price took out that low, we went and took the supply. We broke, and then we took out that supply. And so this low that was responsible for breaking through the supply tells us that buyers had their demand here. And that was why they were able to have enough volume to break through the supply that was here.
Yes.
And so if we are going to come back, this is where we are coming back to. This is where we are coming back to, because we already had something here that price reacted from. Price moved from here, moved from here. If you had to ask me, I would say that we have some breaker block here that should have been mitigated, but it was not mitigated. So we have to work with the recent demand or supply. So I think price just tapped into here, went up from here. This one became the demand. And then we tapped here. From there, this is our new demand now. So price went up and then price came back into it. So we now had price come here and break structure here. Price came here and broke structure. And why do I call that structure? Because why? We already had this high, we had this low. And this high it failed to break structure to the upside. So we came here, we swept it. And when we finished sweeping it, price came down into this. And then we broke eventually. Now, the reason why we call something a break of structure is when price is able to take out a particular high or low and continue in that direction, in the upward direction. So now, if we are able to take out this high and we are able to continue in the upward direction, then that means we had a break of structure. But if we took out this high and then price started reversing back from this leg, and price started reversing back from this leg downward, then that is not a break of structure. That is
Yes.
not a break of structure. So if we are able to take it out and we are still able to continue in the direction that price is aiming for, then a break of structure has occurred there. So I hope you
What
understand.
if you are, yes, sir. What if you took out the high
So what if you are, yes, sir. What if
and
you
then
took
you
out the
go
high
further downward
and then you
for
go
a bearish
further
market?
downward
Yeah,
for
that
a
is what I'm
bearish
saying.
market?
You mean that
Moving
if
further,
we broke the structure and
Moving
then
further,
price started
yes,
reversing downward, yeah,
reversing,
no,
yes,
I
sir.
mean, yeah,
just
instead
like
of
it appeared to be doing here.
reversing, yes, sir.
Yes, yes.
The thing is, a break of structure is still a break of structure.
Yes, yes,
You get, it will still remain a break of structure, because eventually, even after taking out this high here, we still came and took out this structure here. This is one of the objectives of price, to take out a weak high or take out a weak low. So we took out this high here because why? This high failed to break structure to the downside. And so we already had price come and take out this one. This one is more of a liquidity grab in this case. Okay, applying to this is a liquidity grab, because why? We didn't continue the movement of price upward. But applying to this one, we are taking it little by little. All of this thing that happened here, this is internal structure. This one is
Yes.
the external liquidity that we have here. Everything here was internal. So break of structure can also happen in internal structure. You get break of structure can also happen in internal structure, just like it happened here.
Yes, sir.
We took out this eye and then we came and we broke it. We came and broke it. We continued upward after taking it out. I hope you are not confused.
No, I'm not. I'm getting it. So now that you have broken that structure, it is going to the
No, I'm not.
downside.
I'm getting. So
It's
Yes.
now that
going
you
to the
have broken
down.
that structure, it is
So
going to the
So
downside. So
that is
it is
an
going to the
external
downside
move,
as though
but it has not yet
that
broken
is an
internal structure.
external move,
yes. The
but it
thing
has
is,
not
you
yet
just
broken
went and
internal
took out this
structure.
eye. That's all. So it's telling us that okay, all buyers wanted to do was to take out this structure. And that's why the concept of premium and discount is very important. Because when you understand that this eye was the one that was responsible for going down here, and then this eye failed to break structure to the downside. Because if we were to break structure to the downside and recognize this eye as a strong eye, we will see price maybe come here, do this, react from this supply, and then go downward. Okay? So price will just continue from there, go here again, and come back down. So
Breaking structure
breaking
downward.
structure downward continually.
Breaking structure
But now when we
downward.
see this happen,
Yes, yes,
we see that
yes, yes,
price did
yes.
not break structure to the downside. It just came, tap into demand, did not take anything here, did not break this one, did not take anything. So it just came here, tap into the demand, and then started coming back up. So that means that this high is weak. So price will have to come and take it. And which price did here? So this was just a liquidity grab because why we didn't continue upward. We just swept it and then, and price just
Mm.
reversed. And so that is why price had to come for this low. Because why? This low failed to break structure to the upside. You can see that it applies to both sides. If a high fails to break structure
Yes,
to
sir.
the downside, we have to take it. If
Yes.
a low fails to break structure to the upside, we still have to take it. So if it is a liquidity grab that was created, we still have to take it. So it's just two ways. Either it breaks structure or it takes liquidity. If it breaks structure, then we are good. That low is strong. If it breaks structure to the upside, that low is strong. But if it grabs liquidity, then that low is weak. You get?
Yes, sir.
Okay. So that was why we had to come take this
Yes,
low.
sir.
So this low was weak because it failed to break structure to the upside. That was why price had
Okay.
to take it out. And you see now that again we had price sweep this low. It didn't even break it. You see this? It just came here and swept. Because why we didn't continue downward? Just came here and swept.
So it just came to do liquidity there.
Exactly. Just grabbed the
It
liquidity
just came
there,
to do liquidity
went
there.
high again, and then tapped into some supply that was around there. So after tapping into that, you see that already this low has failed to break structure to the upside. And at the same time, this high that was created here through the liquidity grab just failed to break structure to the downside. So now we will now be watching to see which one will price take out first. Will it take out this high that failed to
Yeah.
break structure to the downside, or will it take this low that failed to break
Or
structure to the upside? So now that will now be what we are looking to see.
Sorry, sir. Can you say that again?
Okay, so we
sorry,
are
sir. Can
looking
you
to
say
see
that
what
again?
price will do, whether it will take out the high that failed to actually break structure to the downside. This was the high that
Yes.
created this. And this one, after it swept this
Yes.
low, it just went up back again.
Yes.
It didn't break anything. We didn't continue downward like this. We didn't continue downward like this to come and continue going down.
Yes.
So what it just did was sweep out this high, take out this low, take out this low, and then go back again to try and go up. But when it failed to go up, that means that this low that has now created this particular whatever high here is weak. So we now expect that, okay, price should have to take it. But now we are looking to see, will price take out this high
Mm.
eventually first or take out this low first? Normally we are looking at the nearest one. So we should expect that first of all, price should take out
Yeah.
this low because this low was a
Yeah.
liquidity grab. So it just came
It's
to
closer.
grab liquidity. So we should expect that price should take it out first. But now we now see that price, it got here, and this low was still forming. I still have demand. I still have demand. So it came here, it tap into the demand, tap into the demand. Okay, so we now be watching. Okay, we price now take out this high here, which failed to break structure in the first place. Now we sometimes we call this BSL and SSL. We are still going to get there. Apart from the SSL and BSL I taught you, there is another form of BSL and SSL, and that is just liquidity in that is resting on a high or resting on a low. So when we have a weak low that fails to break structure to the upside, that is SSL. But if we have a weak high that failed to break structure to the downside, that is BSL. So that is just that, by the way. That is just by the way. So we get there soon enough.
Okay.
So
So
now we have not broken either the high or the
So now
low yet.
we have
yes.
not breaking
So that is
either
like
the high
price
or
is
the low
ranging.
yet.
Kò lọ sókè, kò lọ sísàlẹ̀. So ibìkan ó ṣà ń move
Don't
láàrin
worry.
ibìkan ni. So that is just what we have
Mm.
in this case. And so we saw that price reacted to some demand here. Reacted the first time, reacted the second time, and then still came here again and still failed to continue upward. It didn't continue upward. We didn't see price going here to come and do this. And so we know that, okay, we know that this low, all of the low that is here, we should expect that price to come and take it. And so we see price again come into this, using this one as demand, using this one as demand again. So you begin to feel like, okay, are we going to have price take out this high or not? So that will now be the question. You won't want to find an entry here because we have not had confirmation of what price wants to do exactly. We still see price moving in this
Okay.
place. Price has still not taken anything out here. This supply is still as strong as ever. And that supply is still sending price downward because why? This
Yes.
one reacted the first time from the supply. And the second time, price reacted from here because why? The supply can be transferred. The same way demand can be transferred. So we have price transferring supply from this place to this place. And so when price came there a second time, you see that price reacted from this and sold downward. Okay? You see that price reacted from this and sold downward. We will now expect that, okay, should price now take the low, all of the low that is here.
Yes.
But still again, it still fails to take out the low. Taps into demand here and then it goes up
Protect them.
and then finally takes out that supply. Okay, so now we will now feel that, okay, do we have demand on this particular candle? Let's see, do we have demand on this particular candle? And then we go up and then you see there is another liquidity high again because why? Immediately it took it out, it didn't break structure. Immediately it took it out, it just started coming down again. And so we now have to see price come and take this low out because now this low is not worthy to continue. So price will now have to take it out, which
Yes.
it did. Even though in
What we're
this,
fighting for is high
yeah,
What we're fighting for is that high
exactly. That is
that
the
should have been
criminal.
taken that didn't break
And price,
structure
is
initially.
just avoiding, taking his case to court. So that is just the situation here. This eye,
Yes.
this
that
eye
is full.
This eye
That is
was the
full.
one that caused the whole problem here because it started the whole thing by this load that even started the
Yes.
initial problem has been taken out already. This low here has been taken out already. It was the one that created this eye. And this high now is the one that created this low. Now, this low should have been taken so that we can
Yeah.
continue and we have peace. But it decided that, okay, we are not going to take it out. And price was now avoiding this high. Okay, at least if we don't take the low, let this high be taken. And it's not taking it. So, you see that that is the situation that was happening here. And this low now became more of a strong low because while we were protecting this low, we are not taking it out. So, we are protecting it. So, and while we are protecting it, we should expect that, okay, if it's protecting it, then this eye should be taken eventually, according to the laws of structure. You get,
Yes,
according
sir.
to the laws of structure, you should expect that price will
Yes, sir.
take out this structure here. Price should take out the structure here. And so, this was also giving a premium and discount because we kept on buying here, we kept on buying here. Price went into premium and then sold down back again. This low failed to break structure, and so we had to come for it. Let me remove this. And so we had to come for it. We had to come for it. So price swept this low. And what do you see here that happened here?
That's that's actually a liquidity graph
That's
because
that's actually a liquidity graph
it didn't break
because
below. So
it
that's like a liquidity graph.
didn't
Yeah,
Or
break
should I
below.
say
So that's like a
yeah, yeah,
liquidity
you're
I
graph.
can
very
say
much
Or
correct.
should I say,
You're
okay,
very much correct
yeah,
because
yeah,
this
I
eye
can say that.
failed to break structure to the downside. It swept this and then started go back up. It started going back up. So that means that this eye was not strong enough to break structure to the downside. And so we now have to take this eye. It will now be the next area of liquidity. So here you could begin to think of, okay, can we find a position to enter? Can we find an entry? Can we find an entry? So that is where you begin to have the thought of, okay, eventually we know what price is going to do now. Because why? This eye failed to break structure. And this low has shown that it is willing to be protected. So we have been protecting all of this low here. So that means that there is heavy demand in all of this area.
Mm,
Very heavy demand here in all of this area. So as that low is protected, we should expect that eventually we will go for this high. But first of all, this is our first and major concern, this high that failed to break structure here. Because you saw that it just swept it and started going up. Just swept it and started going up. So in this kind of case, you might want to, okay, let's check. Price has tapped into the demand that was here and it has reacted from it. And some form of supply has been taken here. We swept this high and then we came here. The progression of highs and lows, higher highs and higher lows, tells us that, okay, price is moving bullish.
upward.
Yeah.
Yeah.
So we have price react from
upward.
whatever
Yes.
demand was here. It went high here and then, it took out this high. Because why, if you can see, you see that we had some supply that was around here somewhere. You see the supply, price was reacting here. And even here, price was reacting. And we broke it and price came into this. Normally, if we were to be an aggressive trader, we would say that, okay, this low has already taken out whatever supply was here. You say that this low has already taken out whatever supply was here. We get our entry here. But if we want to be like, okay, let's confirm, let's see, are we really bullish? So you see price go up here. Look at how big this candle is. That was volume. So we see price take out this high here and whatever supply too was here. So we saw it take that out. So we'll be like, okay, let's see. What other entry do we have? We see the reaction of price moving here and then this one broke it. So what we are going to see is that there was a form of supply that was here too. There was a form of supply that was here too that price reacted from. That price reacted from. So by the time price came back, it was the same zone that it used. I hope you are getting.
Yes, sir.
It was the same zone that it
Yeah.
used
Yes, sir.
because when I do my analysis, I like to look at what price has done in the past. You see that there was a reaction in all of this here. There was a reaction to something here. It was telling us that, okay, there was a
Yes,
form of
sir.
demand here. Eventually, we went up and then price came down. And this same zone now became an area for price to react from again. So there was a supply here because this one broke whatever demand was around here. So there was a supply here and price reacted from it. And when we broke this, we came down here. You know, I said something. I said that whenever we see price, take out liquidity or whatever with a big candle like this. That means that there was something here that could not be taken out with an ordinary candle.
Yes,
So there had to be enough volume to take out whatever was there.
yes,
You get. So price had to come
yes,
here,
sir.
come into this area as a breaker block
Yes, sir.
and continue from there. So if we wanted to like take a second entry, we could take the second entry here, in here, to go and take out this high. And once we've taken out the high, we should expect that, okay, the next area of focus to be taken out is this high. But you see that what price did, it took out this high and this high in one fell swoop. So it did it all at once.
Yes,
So it took it out. So that means that we have demand in this area. So this was the low that was responsible for taking out that high. And so we should expect that when price comes back, we could have price reacting from here. We could have price reacting from here. And so price moves from there and continues to go up and keeps on moving, takes out the high, break structure there. You can see that there was some supply here too. There was some supply here too.
yes,
I
sir.
think you are confused. Is there anything you want to
No,
ask
I'm
me?
not. I'm just
No, I'm not
following
confused.
what you are doing. Like the
Okay.
only question in my mind
I'm
is,
just following what you are doing. Like the only question in
you
my
see
mind
how
now, because
you
I
you
I
followed
see how
structure from
you
that point you
you
started to explain
followed
Yeah.
the
down
structure
to
from that point you started to
see
explain
when
down
uh,
to
we
see
are
when
we are gaining
uh,
ground with demand.
we
Yeah.
are
So
we are gaining
down to
ground with
where
demand.
we broke
So
the structure that we've
down
been
to
trying to build
where
since.
we
Yeah.
broke the structure that we've
You've
been trying
broken
to
it.
break
Now we are
since.
trying to break it.
We've broken it. Now we are trying to
But my
break a new
question now
structure.
is, where did you
But
take
my
your
question now is,
entry?
where
Okay.
did you take your
I saw that you waited for a
entry?
confirmation.
Yeah.
Because
After
I
that
saw that
breaker
you
block,
waited for a confirmation.
waited for a confirmation to
After
for
that breaker
demand to
block,
rest on
waited for a
that breaker
confirmation
block.
to go for
Do you take
demand
your
to
entry
rest
there as
on that breaker block.
first entry,
Do you
or
take
did
your
you wait for more
entry there
confirmation?
as
Okay, when we have
first
the first
entry, or do you still
confirmation,
wait for more confirmation?
you know that I said that around here we had price respecting. Let me just remove this. I don't want to remove this. Okay. We had price respecting all of this here. We are respecting the demand here somewhere. Sorry.
Yes, sir.
We are expecting a demand here because now we were expecting that this low will be taken, but it was not taken. And when that one was now happening, we said that we had a supply here. We had a supply that was here because price was reacting from something. Price was reacting from something. And so what we will expect is that when price has taken out this supply, then that means that we have some demand that is here that price should take, that price should come into. Because now, whenever we take out the supply here, we should believe that buyers have taken over. You get. One thing that shows the presence of buyers is
Yes, sir.
when a supply is taken out, when a major supply is taken out. And we can see that we had a major supply here. Price was reactive from something. Went here the first time, came back down. Went here, came back down. Went here, came back down. Even came here and was reacting. But eventually we were able to break it. So that tells us that buyers have won the battle. So they have been able to take out the supply here. And so we can now believe that, sorry, give me a minute. So we can now believe that price is ready to go bullish. So we saw that price came again into this demand because initially we feel like, okay, since this eye failed to break this structure here, you should expect that, okay, at least you should go down and break structure. So since it failed to break structure, and we saw that it just only tapped into that demand and came back up. So that means that we are now bullish. And when you draw your premium discount, I said that you can't draw premium discount unless you have confirmation that price is actually reversing in the opposite direction. We've already seen price go up here, and then this one came down here, and then we now
Yes,
see
sir.
price starting to go up. So we can now draw a premium discount from this high to this low. Okay, so now this is our discount. This is not our discount, this is our premium. So we should expect that price to take this high. That's the most important thing. So according to what we have here, this is even 4 hour. According to what we have here, we've already reacted from here. The rest will now be candle analysis. So we've already reacted from here the
Yes.
first time. We went up here. There was something
Yes.
that price was reacting to around here somewhere. You see that?
Yes.
You see all of the mitigation. So this candle was the one that
Yes.
was being mitigated. There was supply on this candle. So price was now mitigating it. Mitigated it the first time. Mitigated it the first time. Came down. And that was when it tapped into this demand. And then price now came back up again. Okay, I have small energy. Let me come and see if I can still fight you. It went up there, tapped into the supply again, reacted from there. This one came down here, but the volume was not enough to push price down to totally annihilate this one here. So you can see that, okay, sellers are getting weak. So we went up here again, reacted, went up here again, reacted, but we didn't come down. So we now came here, and then price was able to fully come into that supply and was able to take it out here. So once the price has done that, I said something. I said that market goes to test supply and demand among one of the three things that price does. It goes to test supply demand. And now when we've already have had the confirmation on the higher on the general that, okay, there was a high that failed to break structure. There was this high that failed to break structure, and number two, there's this low that is protected here, and then we have price react from here, and now we've already gone and taken out the small supply that was here. So now we should expect that, okay, we can take an entry to go and take out that high that failed to break structure downward. Are you getting it?
Yes, sir.
So that will now be our objective. So we'll now be looking for
Yes,
entry.
sir.
And now this was the one candle that price did not take down, because from this candle we took out this supply that was here. So whatever candle was responsible in the first place for taking out a supply can become our POI. You get?
Okay.
It can become
Yes,
our
sir.
POI. And so this candle
Okay.
was the one that
Yes,
started
sir.
the movement, or the protest, or whatever they call it, to take out the supply here. Felt like, you this supply, your wahala is too much. We have to take you out. So this candle was the one responsible for it, and it went and broke the supply that was here. So we should expect that, okay, there is demand and there is volume there. That was enough to do that. So if you wanted to take an entry, you could put your entry here. You could put your entry here. Put your entry here. Because what we have here, there was just a little mitigation of the demand here, and a tiny mitigation of the demand here. that was on this candle. As I explained in the mitigation in the last session, I said that price always likes to mitigate the previous candle. Whatever demand or supply is in that previous candle, that is what the next candle will mitigate before it goes up.
Yes, sir.
And so we see that here, it did not even mitigate it
Yes,
by
sir.
much. It just mitigated it a little, went up. This one mitigated it a tiny bit, went up. So when price came down and they were selling, still trying to sell, they met demand here. The main demand here and it went up. And so now that price is coming down again, you should expect that okay, this candle that started the move, this one will now be the oga that will be able to maintain that okay, we are very much bullish. And so we can mark this zone to the low of this candle because this low is what we should expect should not be taken. Are you with me? You should expect that this low
Yes.
should not be taken.
Yes,
And
sir.
so we can put our zone around here and then put our entry there. And then the objective now will now be this eye that failed to break structure to the downside. We have to end this section soon. I think we end it with this. So this is 22 RR. That's not really bad. So that's
Okay, sir.
22.41 RR. Don't get crazy with the RR.
22 RR. That's
So
a lot.
Wait, what is what the effort? Is
yeah,
what the effort?
But
it is what the effort.
it's what the effort.
Count
So
It's what the
analysis.
effort. Eh? Counter analysis.
so that will be your target because we have this eye. But in this case, we will
Uh-huh.
have two targets. Okay. So you can place two positions. Are you there? Okay. Can you hear me now?
Yes, very well.
Okay, so we have two positions. One to take
Yes,
out
very
this
well.
eye. Another one to take out this eye. It's not even much because the distance is not much. Not by much. So I want to take out this eye. I want to take out this first eye. And another one to take out this second eye. So if we take out this second eye, that's 25.41 RR. So they are not very much far from each
Mm.
other. So once the objective is taken out, as it did here, once the objective is taken out, then the next thing is to see what else price is going to give us. So as we have taken out that eye, we should see what next price is going to give us. So we'll now look at, okay, let's see where demand is in this particular structure, this particular leg. So this premium discount now is now going to go because why? We have already taken out our objective. The next thing is to expect that okay, price will continue to go up. We will now look for another objective higher than this. So the next objective will be this one. So we keep on going higher and higher now.
Okay.
So the next objective will be that. Where are we? Okay, taking out this high. So the next thing we will expect now is that okay, maybe price will come for that or that one. Since we started from here, we now have a new structure. Wait, there's another place I wanted to mark. It's not there. Okay, so we've taken out this eye here, yeah. So now this is now our new structure. This to this, this to this. Okay, so this is our new structure. And then usually we will say that these are discounts and this is our premium. But in this case, we see that price goes up here and comes back here to react. And once price has reacted from here, that means that there was demand here. So price didn't need to come back again, and it has gone this time around to break structure. And so since it broke structure, you should expect that okay, this low will be respected. So you could take a wager and say that okay, you should expect that price will come into this demand here and react from there, and then we should go up and take out this high. So that is where we are. But then you begin to see that price is rejecting, taking out
Okay.
the highs, taking out the lows. So in that kind of case, you just have to be careful because we are not breaking structure upward. So price now comes back
Yes.
into the main demand, and it still fails to break structure to the upside, which is this. So since that fails to break structure to the upside, you just delete your position and get out of there. So
Yeah.
you see that price now came and swept the low because this low is weak. It didn't break structure to the upside. So in the first place, it didn't break structure. It didn't break structure to the upside because it was just a liquidity high that it made here. So a liquidity high came here. So it was looking like as if okay, there was demand here because we broke this structure here. It didn't continue upward. So we were now looking for demand on the low, and we could not find the demand. So price now has to take it, which is what it did. It swept here, and then it went there, and now we are reacting from some demand here, from some supply here.
Supply.
Yeah, and so price now came down into
Supply.
something here. And so what we should be expecting in the ensuing weeks is we should see price try to take out this high first. This high first.
Yeah. So assuming we have
Yes.
a
So
liquidity
assuming we
graph
have
on the demand side,
a
then
Yeah,
it's supposed to go
liquidity
back and
graph
bring that
for the
structure.
demand side,
yeah, we should expect
then
price to
it's
go and
supposed to
take
go
out
back
this
and break
structure.
that structure.
So we've had
Otherwise, if
price.
it's not doing that,
Otherwise, if
it's
it's
supposed to
not doing
go
that,
downwards
if
to
it's not doing
reversal.
that, that means it's supposed to
Exactly. So
go
if it does not do
downwards
that,
as a
then
reversal.
we will come again and take this low. And if this low still fails to, if the low, whatever is here, still fails to break structure to the upside, then we'll go again, take this low. After taking this low, if this one too fails to, hold demand, then we come back and take this low. So either price goes up or goes down. So that's just the way it is. If it doesn't go up, then it will have to go down. If it doesn't go down, then it will have to go up. So that's just it. So we end our session here, and
This section is really, really, really eye opening.
This section is really, really,
Really,
really eye-opening.
the way you
Like,
broke it down
really,
from
the way
structure,
you
you've taught me
broke
in
it
part
down
before, but you
from
started to
structure.
use
You've
the
taught me
tools,
in part before,
and I started to
but
see
you
the
started
beauty
to
market,
use
yeah,
tools, and I started to see the
the
so
beauty of
positions
the
one can
market
take.
yeah, so that is the way the
and the
market
positions
works.
one can take.
So if you are going to draw your discounts and premium, you should be able to be sure of where you are checking. And if you are going to call a place a break of structure too, you can also, verify what is happening there. But the most important is to understand what is happening generally. That will be able to help you to determine where you will place, where you will say that a break of structure happened or where a premium and discount is. So that is just it. I know that you are beginning to get that. So I'll just send you some pictures so you'll be able to, determine where the supply and demand is, where the high or the low is, which one is the weak or low high, weak low or the weak high. So you determine that, and you can also find out where we can take entries, if at all. So I'll send that to you as soon as I get a
Thank you, sir.
response from the person. So I'll do that and send it to you.
Thank you so much, sir.
Yes, sir.
Thank you so
Do
much.
you have any
Thank you
questions?
so much, sir. Thank you so much for your time and
No,
sacrifice.
sir. The only
I
thing I
appreciate.
will really request,
I no, sir. The
this
only
section,
thing I
by the
will
time you are
really
done,
request is
by the time you send the thing to me, I will
this
go over
section.
it
By the time
again
you are done, by the
carefully,
time you send the link to me, I will go over it
carefully.
again carefully.
All right, sir. That would be
Carefully.
great. I will appreciate that. Okay, sir. I wish you a
Thank you,
great
sir.
Yes, sir.
night and a great week.
Thank you, sir.
Thank you, sir. Thank you so much,
Sir,
sir.
Thank you, sir.
see
Thank you so
you
Thank
much,
you,
sir.
sir.
on Wednesday.
In fact, I wanted to tell
Thank you,
you
sir.
something. I was like,
Yeah.
maybe,
In fact, I wanted to tell you
Okay,
something.
what's that?
I was like, maybe
I prayed a prayer this
you
year.
know,
Okay.
I prayed
Prayer
a
was
prayer
actually
this
at the
year.
beginning of
The
my
prayer was
pastor,
actually
Pastor Fulabi
at the beginning of
conducted the
my pastor. Pastor
ASU.
Falabi
Okay.
And
conducted the
he
ASO,
said that people should pray. We should all pray for
and
our Joseph.
he said that
To
people
pray
should
for what?
pray. We should
That
all
God will
pray for our
send
Joseph.
Okay.
Joseph,
We should pray for our Joseph. That God will
people
send
that
Joseph.
Joseph that will go ahead of
Joseph. People that Joseph that will go
speak
ahead of
room like Joseph did for his
and
brother.
Yeah.
and split room like Joseph did
For
for his
me,
brother.
when such words come like that, my friend is that I hold on
For
to God's
me,
word.
when such words come like
Mm.
that,
And I've
my
seen some
experience is that I
stuff.
hold on to God's word
For
and
this
pray.
very one, I was like, okay,
And I've
there's
seen
something
some
I was expecting
results.
God to do,
For
right?
this very
And
one,
I
I was like, okay, there's something I was
program my
expecting
master's
God to do,
program
right?
and some
Like
other things
my
after my master's program.
program, my
So I
Yeah.
master's
was already
program,
expecting God to do
and
that.
some other things after
Okay,
my master's
I'm
program.
looking at
So I was
something
already
else
expecting
that
God
okay,
that,
God will
okay,
just send
I'm looking
somebody
at
my
something
way that will
else
give
that, okay,
me
God will
make
just
my
send
sponsor
somebody my
my
way that will give
to further my
me,
education.
make my
Yeah.
sponsor
Because
to further my
I've
education,
worked for God and
because
that
I've,
is where I
I've
want
worked
Him to
for God, and that is where I want Him